Good morning, traders. It's the 2nd of March. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate.
How are you doing today?
All diddly do. Thank you very much.
Good.
Oh,
Glad to hear it.
where have I gone?
What's happened?
Oh, unshared my screen, but I
Oh,
wasn't
no.
meant to share it anyway.
Okay,
Here we
cool.
go.
Right, so market news. As we all know, the Ukraine developments continue to dominate the headlines, and they have done over the past 24 hours. During Tuesday, there were strong expectations that Russian forces would look to step up their attacks on the main cities, including Kiev, while there was further strong fighting in the second city of Kharkiv. Reports suggest that the city of Kherson in the south has also been captured by Russian forces. Yesterday, we saw US President Biden announce the banning of Russian planes from US airspace, while Boeing and Apple announced they would suspend doing business with Russia. So, obviously, these sanctions and measures from the West are eventually going to start to bite. In terms of what's happening in risk terms, high volatility remained a key feature yesterday across pretty much all asset classes. Equities posted sharp losses while there was renewed demand for defensive assets. The yen, Swiss franc, and the dollar were in demand yesterday, while the euro got absolutely smoked as it continues to come under strong pressure amid further downgrading of ECB expectations. In the commodity space, oil spiked to fresh 7-year highs. A fantastic move to the upside on that yesterday. During Tuesday's session, fresh unease over global supplies. We also have an OPEC meeting today to keep an eye on, with rhetoric being monitored closely, especially as actual production has been running below planned levels. Markets will be sceptical over any promises of increased production unless there is actual evidence of higher output. There were some good numbers from the US yesterday on the ISM manufacturing index front. That strengthened to 58.6 from 57.6 a month previous. And we also had some commentary from Saunders from the Bank of England. And he stated that risks are on the side of stronger and more persistent inflation, and that's prompted tightening now. Tightening now could help limit the total scale of tightening that will be needed. So more commentary coming out there. 90% chance of a 0.25% rate hike in the coming meeting. So plenty going on. What's catching your interest on the chart, Steve?
I suppose oil is the real one that's capturing my interest. We've from the WTI front, we've broken through the $100 level very, very aggressively and catapulted higher. We can see it on a weekly chart. Like you said, 7-year highs probably yesterday, probably more like 9-year highs. The highest we've been in probably 9 years. This is 2013, right the way back here. 113.27 was the high then. We've surpassed the 2014 highs of 108.48. What is the high? 109.71 we've been up to, just short of $110 a barrel. So we can see how quickly this moved on the 1-hour chart. So this was the previous resistance and swing high, 99.95 on WTI crude oil, and yesterday you can see around about 2 o'clock UK time had the sort of exponential move higher. I mean, that's a pretty strong move, almost 10% in the space of 12 hours. So yeah, that looks solid. No, nothing really slowing that down. However, we do have this resistance between the 113, 115 area. So watch out for that. On the gold side of things, we've seen a flight to quality again, safe haven bid continuing. Weekly chart, we can see that we've opened up lower yesterday around about 1890 and moved higher, got up to a high of 1950. Actually, 1950 was on the 24th. Oh, no, let me see. Get the daily chart up, Steve. Come on. No, we did get up to 1950. Started off a little bit low this morning, opened up just around about unchanged from last night, 1945, and it's moved lower, 1936. We expect to find the support around about the 1916, 1920 area in gold. That's where we expect to find trend followers buying into it. And yeah, just a temporary stall, it feels, at the moment for gold. Further upside expected. Cryptos, Bitcoin has performed okay as well. On the daily chart, we can see the extension higher continued yesterday, although we've had a small pullback this morning. Resistance coming in at the moment at 45,000, and above that, 45,850. We can see this is a potential for a double bottom. If we manage to get above this 45,850, 46,000 level, there is potential for an extended move higher yet again. So Bitcoin really sort of like pushing aggressively. Looking at the 4-hour chart, however, maybe a sign of stalling. A lot of doji candles, indecision, hanging man candle, bit of a reversal there. So I would say it's quite a fragile rally because of the extent or the extension we've seen higher. This is a 4-hour chart over the last few days. Now, looking across to indices, obviously indices are pretty tricky. We had the sell-off over the last couple of days in FTSE, a little bit more positive this morning. This upward trending support line, which we've drawn in all the way back from the lows of the 2020, supported here around about this point, and could maybe withdraw that a bit more accurately, but really sort of focusing on these the last week of price action has really held around that trend line, so that's good. That's working quite well for that. Looking on the weekly chart, you can see again we've stalled at 7,685 and trading below there. So this week is a negative looking candle so far, but we haven't taken out last week's low. Last week's candle could be said to be, although it did recover from the sell-off, could be a hanging man candle. So further downside to come potentially. DAX has collapsed, so let's get the daily chart up. We had this double top formation. It's broken the neckline really nicely, retested it, and then continued lower. We've even taken out the 13,828 support. However, we still haven't quite made it to the 38% Fibonacci, which is a normal correction in a rally. So although it feels like a bit of an end of the world sell-off, we are still only around about 30% lower than the highs, from the highs, 16,300. Good support around these levels, previous swing highs, a good sort of backwards and forwards supply demand around about the start of January 2021, where we saw a confluence area of support resistance. And yeah, this really highlights that there is potential for further downside in the indices, but depends on which one you pick. Be careful which one you go for. Dow is under pressure again, hanging man candle on the daily chart on Monday. Yesterday, the continuation lower, so we're basically getting back to where we were last week, last Wednesday, where we had the big sell-off. Then we had the spike lower on the Thursday, when Russia basically invaded Ukraine officially, and then we had the reaction higher from there. But we're getting down to those levels again. So for me, on the Dow, 33,160 is pretty key. It's got to hold on to there, otherwise we could be really seeing some decent pressure to the downside. Nasdaq seems to have maintained its recovery compared to Dow. We did have the hanging man candle on Monday, the bearish engulfing yesterday, and further negative downside today. So again, 13,920 looks to be the area to really focus on. If we get below there and close below there on a daily basis, that would be pretty negative. It would have taken out all the support around the end of January and the end of February levels of support. I think that's pretty much it. Just to sort of like keep highlighting this fact. I know I haven't talked about China for a little while. We are trading around the big key level for me, 14,500. We spiked below it last Thursday on the 24th of February, which was a very dark day for indices, but they did recover. And again, that 14,500 for me in the China index could be quite key. Obviously, China rumored to be involved or being there as a sort of supportive member to Russia, I
Ally.
suppose. Yeah, and
Although
that's
they did. I think they did request peace talks.
yeah.
So I don't know if that's just
Yeah, I don't know whether that could sort of like influence things. It could be a little bit more of a, oh, okay, we've put sanctions on Russia. Let's put sanctions on their allies then as well.
yeah,
That could
maybe.
sort of like, force their hand. It wouldn't. I hope I haven't given the rest of the
Giving
world
them any
some
ideas.
ideas that really kick things off. But yeah, so that's what I'm seeing on my side. Over to you on
Nice.
the FX, Joe.
Thank you. Yeah, interesting day yesterday. We saw dollar index really get bid up as there was a real sort of push to safer haven assets. So this is the price action that we saw yesterday on the dollar index, pretty much moving higher throughout the trading session, just a little bit off of the highs at the close. But today, again, very much on the front foot, up by 0.25% already, and slamming into this resistance that we have at 97.72, which is the 61.8% Fibonacci retracement level of this entire move here. So this was the highs that we posted in and around the height of the pandemic when things really kicked off back in March 2020. We then saw pretty aggressive sell-off as people moved into riskier assets like stocks, and as we know, they had a fantastic time of things in the aftermath of that. Then we saw it bottom out in January 2021, and since then we've seen prices continue to steadily climb within this bullish channel. So this is the first kind of, well, not the first, but a major test for the dollar index in the medium term. I think if we can overcome that level, then we will start heading up to potentially towards the $100 mark. Which is where I believe, or where I've suggested, I think prices could get to on the dollar index at some point this year. So looking pretty rosy on the dollar index front. And as a result of that, you're going to see negativity in euro US dollar. That continues to move lower. Following the completion of this head and shoulders top, we're moving low within the downtrend. We took out the lows yesterday that we had previously at 111.21, and we're moving close towards this measured move target of the head and shoulders top at 110.58. And then we can start looking potentially for even lower prices. Euro getting absolutely killed against many currencies at the minute, and I'll come on to show you some charts on that in a moment. Let's take a quick look at cable. That continues to find some support around the 78.6% fib level, and that's coming in at 132.87. So we've tested that again today, following quite an aggressive sell-off yesterday. Again, pretty much being driven by dollar strength, but sterling isn't really doing an awful lot really at the moment as well. Lost all sort of appeal in this kind of dash for safer haven currencies. Just going back to the euro story, there's some really interesting charts here. Euro Oz, one that caught my eye, 11 consecutive down days on this now, including today, suggesting that it does close lower. We've got some real key support down here from February 2021. So this sort of capitulation in line with this support here may attract some speculators to try and have a go at that level, given how beaten up it's been. Maybe worthwhile looking at some other indicators like some of the oscillators to see if there's any kind of divergence present on that before attempting that. But looks obviously highly speculative, but just in terms of pure speculation, you think that maybe there will be an update in there at some point. I'm not saying it's going to be something that reverses the trajectory of this price, but something that speculators may be able to have a look at. Looking at Euro CAD, that's potentially breaking down to new lows as well. We're bang on 141.00. We've got to go back a considerable amount of time to find when it was last at these levels, all the way back here in 2017. If we look at Euro Swiss, obviously money flooding into the Swiss franc. So that's why we're seeing this occur. Big break lower from this key support here at 103.26 and showing no signs of stalling at all. Again, not sure how far we have to go back to see where levels were previously here. Let's just go for a little scroll back to the left. We're going all the way back to 2015 on that. So, some historic levels here that we're taking out, and, some pretty aggressive selling being seen, certainly on the euro, or aggressive buying up of the Swiss franc. So yeah, there's just a couple of charts I wanted to highlight. Obviously, I'm not going to go through every single pair because we haven't got the time for it, but there are some interesting things going on out there at the moment. In terms of data today, there's quite a bit of central bank action. So, obviously there's a big situation with regards to interest rates and tackling inflation, and obviously dealing with this crisis that we're facing at the moment between Ukraine and Russia. So there's going to be some wild price action, I think, that's going to be created also by the central banks. We've got Fed Chair Powell, his testimony at 3 o'clock today, and then at the same time we've got a Bank of Canada policy decision. So if you're trading anything linked to the Canadian dollar or the US dollar later on today, you may want to be very careful about that and brace yourself for some additional volatility. Okay, gun to the head trades from yesterday. Steve, we sold Indices yesterday, which turned out to be a pretty good call. You made 1.11R on your NASDAQ trade. That actually outperformed yesterday along with the FTSE 100, but we caught a nice one on the DAX. That actually went on to hit target for a 2R win. Just a shame it wasn't a bigger risk reward play on that one. But still getting killed again today by the looks of things.
Yeah, definitely nothing supportive about Joe, and obviously further escalation on the Russia-Ukraine side of things. So I'm going to go for a similar sort of trade idea. I think if you look back at what I was looking at yesterday, the potential for this inverse head and shoulder, the neckline wasn't broken, so I faded the sell-off, this turnaround, these candles bearish engulfing, and went short here. Similar sort of price action. We've broken down below the 1 hour Ichimoku cloud, so that tells us that the 1 hour trend is stalling also. So I'm going to sort of like stick to the plan. Getting short here at 14,013. I can have the stop pretty tight. 125 point stop, stopping at 14,138, which is above this swing high here and the 8 o'clock swing high last night. So that takes into account the sort of like the close of the markets, and really looking to target a 4-to-1 risk reward on here, which will be targeting. Let's see what the sort of fib is telling us. What is that on the Fibonacci side of things? Around about the 61.8% fib retracement level. So 4-to-1 risk reward. I'm going to go for that one, Joe. Quite an aggressive stop because of the volatility we're seeing at the moment. However, you got to be in it to win it, I think.
You do indeed, especially in these kind of markets and with central bank action today as well. Anything can happen with these markets. I'm going to take a look at the DAX again as well. This is the trade from yesterday, which you can see worked out pretty splendidly. Sold it here, targeted these lows down here, which are pretty much nailed before then bouncing. So that worked out really nicely indeed. So if I now get rid of that, what we can see is that this support line here at 13,795, we've just seen the first close below that on the hourly chart. So that may be an indication that this support level has now been breached, and we can comfortably say that. We've seen a little bit of a retest of it as well, and now we can maybe speculate on lower prices from here, a continuation lower. Looking at that week daily chart that you showed me, looked pretty interesting. Obviously, we've seen a massive breakdown from this big top pattern that we both spoke about. But what really interested me about what you mentioned was that this 38.2% fib level was still some distance away from it, and a move down to this kind of level would just be considered a normal correction in the grand scheme of things. I know this is probably painful for a lot of people and a lot of participants, but a move down to this level should never really have been ruled out by any trader that's follows technical analysis. So I can use that as my basis for a target. and that will give me a really nice risk reward setup today. So let's finesse this. I'm going to sell it now at 13,775. I'm going to put a stop loss just above that little correction that we saw posted overnight at 13,997. I mean, if you're looking to follow this trade, maybe you'd want to be above the psychological 14,000 level, but I'm going to go there instead. And I'm going to target that 38.2% using the higher time frame to find that. And that target is 13,118. So looking for 2.9R on that one today.
Very exciting, Joe.
I felt like that was actually a bit more substance behind that gun to the head trade rather than just normally just picking anything that comes across the charts that looks relatively interesting. We'll see.
Yeah,
probably means it won't win. As I mentioned, data today is going to be keeping us on our toes. At 1:15 UK time, we've got US ADP employment report, which is generally a precursor to the non-farm payroll number that's due out on Friday. I won't really put too much emphasis on that, I don't think, today. Then at 3 o'clock, we've got the Fed Chair testimony, as well as the Bank of Canada policy decision. So central bank commentary is likely to be critical at the moment in the markets and could create some pretty impressive volatility, obviously coupled with what's going on with Russia and Ukraine. And then at 3:30 UK time, we've got the EIA weekly crude oil inventories number, as well as an OPEC meeting that will be going on throughout the day. So plenty of commentary to come from that as well. Plenty to keep us interested in the markets today. So unless you've got anything else, Steve, I think we can wrap it up there for the day.
No, that's all good, mate.
Lovely. Okay, well, have a good day, everybody. Be safe, and we'll see you tomorrow.
Cheers.
Bye.